GM. So Bitcoin is in this high time frame range that I've been mentioning for some weeks now. The high risk to reward zone for longs is the discount zone, and the high risk to reward zone for shorts is the premium zone. And on the weekly, we've come into the discount zone, which also confluences with the 100-week EMA, this red line here, also confluences with this previous reaccumulation zone over here that led to new all-time highs. So plenty of reasons for this to be an area where high time frame players who sold in this distribution start to think about, at least, if not, do some high time frame buying. And well, mentioned this range some time ago, telling you guys that this area is the high risk reward area for longs, mapped out a path in that post, which has played out pretty beautifully now. So that is why I thought this area is at least going to lead to some bounce. Now, does that bounce have to go to new all-time highs? No, not necessarily. But point is, it's an area of high risk to reward where you want to do business as a trader. You don't want to do business in the middle for multi-day, multi-week holds. You want to do business either at the extreme, looking for shorts, or at the extreme, looking for longs. So we did some high time frame buying, as you guys will know from the recent videos, at 82k and 86k on the long-term portfolio. But I'm actively looking for swing longs now on the trading portfolio too, to get some more long exposure. So that's going to take patience. And that's something that a lot of traders, I think, find a hard time understanding. And I want to dive into that today. So on the weekly, 12 and 21 EMA bands, they are red. It's not like over here where they go red for literally one candle before flipping back green. This was just an overall compression within a consolidation, or really that was the only time they went red in this bull market actually. So it's not like that example there. They've been green the whole way up. It is a shift. It is a break in the cycle, and we are seeing a weekly downtrend, but as I said, it's come into a high risk reward zone for longs. So even just for a bounce to 100 or bounce to 110, everything points towards looking for longs and not shorts. And shorts have been the play some weeks before that. It gets crowded, and then the undercrowded trade becomes the long side. So yes, the weekly is in a downtrend. There is a shift here, and there is going to be a reaccumulation needed to take us to new all-time highs. There is going to need to be that cause and effect, smart money rebuying, which takes time. It is still an area where you do look for upside, and how that upside is going to play out is the important question. We trade path, not, of course, the direction. So when you zoom into something like the daily, what are we seeing? Well, you can see that the 100-week EMA, respected, has led to a bounce. Of course, you had this big capitulation, high volume capitulation over here with all the signs of a bottom that I've been mentioning. And really, this zone over here in this wick is now your imbalance. This is an area where if price came back to it, I'd be looking for bids. I'd be looking for setups, whether that's going to be a sweep of the lows and reclaim. I'll be looking for longs, whether that's going to be a higher low. This overall area between 80k and 85k, and you can call it 79 as well, given that the sweep example is also something that can play out. It's somewhere where you want to look for a retest. Is that retest guaranteed to come? No. But as traders, generally waiting for a retest offers higher risk to reward than FOMOing into a V reversal, because right now, what you're seeing is all of this liquidity is building up. It's all untested. All of these lows over here. Price is just slowly grinding higher, making it hard for people to get long. This is what price does. It's now trading within the daily 12 and 21 bands, which previously have been a rejection point in this downtrend. So you're at this crossroads here where if price is bottoming out, it would go sideways here, maybe have a dip, and then go on an extended rally. Or maybe it just goes sideways here and then continues into a V reversal move. Or maybe it rejects here, because we're also at a point where, as I said, we've rejected previously. So it's the area to have patience. It's not the area where you can say you have loads of edge here. maybe scalping, low time frame, that's fine. But for high risk to reward longs on multi-day, multi-week holds, you're at a pivot point where it could go either way right now. And even if we are going to go higher in both scenarios, I think even a V reversal still will end up coming back for a retest of those lows, even if it is more aggressive like this. Because it's the retest of these imbalance zones which shows you whether there's demand there or not. Because if you come back to this blue zone and then you fail to go lower, that shows that price doesn't want to go below here. And this is in fact where buyers want to step in. That's why waiting for a retest is always optimal. And you can see this time and time again on all of these big imbalances. So if you look at this October 10th wick, even though this ended up going lower, when price retested the wick, it did lead to a bounce, but bounce eventually failed, closed below. That was your sign that downtrend's going to continue. You can find some bullish examples, like over here. You have this big imbalance wick. A couple days later, retests it, can't go lower, so the market goes higher, path of least resistance. You have this example here. Got a wick. Price eventually retests it, so notice how this is only getting retested almost a month later, actually over a month later. So there's just so many ways price can play out here. We can see this V reversal, what will seem like a V reversal at least. If you were trading around here, that looks like price is just going to endlessly go up. Of course, it comes back for a retest eventually, but that's how bottoms can form in many different ways. Whereas in this example, the retest comes literally 2 days later. So there's just so many different ways that path can play out here, that when you're at this area where price is squeezed up and not taken any lows, just grinded higher, there's just no edge, and patience is actually going to offer the best setups. And there is also always a possibility, because we're in a weekly downtrend, daily downtrend, that we also just break through these levels and have to actually reaccumulate at a lower base, maybe in the 70s. Maybe we get something like this. Maybe this is a fake pump before the real move to the lows, and then we bottom out over here. There's so many different ways price can play out. That's why we have our systems and our rules, why we have to stick to them, so that we know what to do in these scenarios. And we stick to our data-backed systems because that's all we can rely on. So that's what I'd be looking at in terms of Bitcoin, really waiting for some sort of retest of this blue zone and that 100-week EMA. And the reason this ends up working in your favor is because price can go higher, and it looks like it's probably set to squeeze at least to the yearly open. That gets everyone super bullish, and then when price comes back down to the 100-week EMA or that imbalance, everyone gets bearish and loses their mind. And it's those retests at known support or unconfirmed support potentially, where if you see bearish sentiment, it actually offers the greatest setups. Bearish sentiment going into support and bullish sentiment going into resistance offer your best trades, your high probability trades. So that's the psychology as well behind why the retest is better. And I do think for that very reason is exactly why we probably do just go higher, just to get people frustrated and get people FOMOing bulls long in the worst places while price has been up only, and eventually then they're going to get their patience tested. And I think when they're getting wrecked is when I always want to be looking for long setups. That has always served me very well in the markets. And when we look closer at the chart, so grab a cleaner chart here, you can visually see how this 100-week EMA has been retested and respected. So that's why I think it's a very nice level over here in conjunction with this imbalance that I mentioned, where any retest should hold as demand, at least again for a bounce to maybe this 50-week EMA, which is currently sitting around 100K. And we can play that move in between both of those levels. I still think upside is definitely favorable, and that's why it's a market where I'm looking for longs. That's why I did high time frame buying on the long-term portfolio at the low of this candle between 82 and 86. And that is why I'm in such a good position where, sure, even if we don't get a retest and we do just V reverse, which is unlikely but can happen, I've got spot exposure now. I'm going to be capturing this move with the spot bags. That's going to be all good for me. So because I took risk and allocated capital into Bitcoin at the lows, I can now wait when it comes to short-term trading for the best setups and don't have to chase this move. Because right now, what are we seeing data-wise? Well, heading into the New York session today, it's going to be a half session. It ends at 1 p.m. New York time. So Friday, the last session before, or half session before the end of the month. On Monday, it's going to be December. So getting into that monthly close now here, what are we seeing? Well, obviously you've had this lovely consolidation. Price has been compressing. As we came into Deribit OPEX, what you actually saw was at 90K, price managed to close above it. So we tried to attempt to push below it in these pushes lower, but there clearly was a spot bid, clearly still is demand, and clearly still are shorts which have to close out, as we got nowhere near 90K at 8 a.m., which you'd usually see happen. So all of the puts at 90, 85, 80, they all expired worthless. So shorts, they've been wrecked on both options and now are continuing to get wrecked on perps. And it's, again, no surprise, I've been saying for the last week now, reversals likely. Bears are in danger. You can check all my videos because we saw the ETF outflows, massive outflows, typically leads to local bottom. We saw the higher volume push down, leading to some capitulation. That forced selling I've been telling you guys about, we all got those signs. Now, it's just a matter of patience here as shorts continue to get squeezed as we break out of this compression pattern over here. So Bitcoin pushing up pre-New York session. What you want to see is this box hold on any retests now, I think, because we are pushing up pre-New York. This is very much futures led. You can see by the perp CVD that it is longs who are pushing this up more so than the spot market. But when you take a look at the entire consolidation, what are we seeing again? Well, it's another divergence. You've got perp CVD making a lower high, whereas spot CVD is actually making a higher high. And all importantly, price is respecting the high high and making a new high price-wise. Open interest still bleeds, which literally tells us shorts are still getting forced out of the market. In this consolidation, shorts are now getting churned. Anyone who's shorted within here is now getting wrecked, and that can fuel higher prices. Again, it's not necessarily underlying bullish demand, but short squeezes can go much higher than you expect. So, when you're looking at Bitcoin here, what can we expect? Well, yearly open seems to be the fair target for this move that I've been mentioning. I think we can definitely get up to the yearly open. I think you've got some inefficiencies here. So you've got this gap up. That catches my eye on the 4 hour over here. And we can remove this 90K level now, not important. You've also got an efficiency over here between these candles. So there's a gap right at their yearly open there going up to 95.2K. Question is, what kind of gets tested first? Do we actually see some really wild volatility and get something like this? A nice wick into this gap here would potentially offer a nice long setup, especially if you see that hold. If you see price close and accept into it, that's when you likely actually start filling in the gap and going lower, maybe for that retest I talked about. Alternatively, if we push higher, then you want to see how does price react to the yearly open. Is that where we then reject? Or do we actually get above it, do something we haven't been able to do and start consolidating and accepting above there? And maybe then we're going to push on to 100K. So be watching to see how price reacts to this above gap around the yearly open if we can make it there, and this below gap around the high 80s if we do have any dips. Do these gaps get supported in the uptrend? Do these gaps get rejected in the uptrend? That's the question that we want to ask. Or do we actually flip gaps? And that's bullish. When you flip bearish gaps, that shows uptrend strength. When you reject bearish gaps, that's what you expect. So that's the area to look for either reverse or flip. And this is the area to either look for bounce or acceptance and lower. Very simple. So you only want to see a wick into here. You don't want to see closes into here. Otherwise, it's likely to go for that retest that I talked about. So same on this side. You want to see closes above if bullish. That leads to continuation higher. Otherwise, if you start wicking, showing signs of rejection, you get that market structure break, the low that led to the recent high gets broken, that can set up your reversals. So that's what I'll be looking at. There's targets higher, targets lower. Let's see which way this all shakes out. Of course, we are in an internal uptrend. It's consolidation, markup, and this potentially is a consolidation here, which is leading to the next markup. Of course, 2 hours to go on this 4-hour candle still, so that can change very quickly, especially heading into the New York session, but so far so good. And data-wise, it looks like shorts are getting squeezed. Shorts are on the wrong side of this move, fighting the trend, fighting the uptrend, and that leads to shorts getting wrecked and fueling the move higher. Until longs start aping in, until longs start FOMOing in, which is at the top, and perp CVD starts taking over and you lose the spot bid. That's where you get the reversal, but until then, we expect continuation higher until we hit a key level like the yearly open. So that's what I'm looking at. I think this definitely can continue higher as long as shorts keep getting squeezed and they get forced out the markets. To the downside, I'd be looking at this gap to hold. If we fill it, then I'd be looking at the setups that I've been mentioning for some time now, which is, as mentioned, that higher low scenario around that 100-week EMA or a sweep of the liquidity and reclaim. That's where I want to allocate for some swing longs on my short-term trading portfolio. So that's Bitcoin. That's the markets. If you enjoyed this video, drop a like, drop a comment, drop a subscribe. Make sure you turn that bell on so that I know you value this content. Appreciate all you guys' support, and I'll see you in the next video tomorrow. GM.